Welcome to Fomo Consulting for your daily AMC stock analysis video on Thursday, August 19th. Ladies and gentlemen, we are in dangerous waters right now, and I'll show you very shortly. And as always, the apes are winning, the diamond hands are winning, most importantly, the retail investors winning. So if you find this video informative and entertaining, please like, share, certainly comment, and most importantly, subscribe. It's a newer channel, and I'd appreciate the support. Let's get into the video. Thank you to each and every one of you who have liked, shared, commented, and subscribed. It means the absolute world to me. Thank you very, very much. Let's start with a quote. Beliefs should make way for facts. Obviously, we all believe in AMC stock, but at the end of the day, facts always should remain paramount in our decision-making process, and I'll deliver those facts each and every day to you, and you make your own decision. Well, apparently there was a taper tantrum today. As you can see, it was a very, very volatile day on the broader market. S&P finished up green by 3 points. Dow was down 94 points. Yet another red day on the Dow. NASDAQ recovered up 15, and the Russell sold off and got hit hard and down 29, as you can see, which AMC certainly felt the effects of in many, many other recovery plays. Overall, it was just volatile. Pre-market, a lot of selling pressure, certainly at the opening bell. Recovered a bit, sold off again, recovered a bit, sold off a bit. It was just one of those roller coaster days where the market really didn't have a direction. There was a lot of volatility, and certainly most stocks felt the effect of that. Crypto is having a fine, fine day. Cardano is absolutely ripping up 14%, at least at the time of this recording. Bitcoin has recovered the $46,000 level, which is really important. Doge is back up over 30 cents at 31 cents. Overall, great day for crypto as it stands right now. And if you're in these plays, congratulations. So AMC, the German apes, suffered the same fate as we did, down 29, 51 euros, down 8.5%. Certainly had worse days, but we're certainly feeling the effects of the broader market. So tomorrow, options always in play, as each and every one of you know. $30 strike, you've got 16,000 and change in open interest on the put side. Currently, where we are, you've kind of got equal pressure, give or take, about 13,000 at the $34 strike and about 9,400 at the $33 strike on the put side, as you can see. And on the extreme side, run up, you've got 43,000 plus in open interest on the calls at the $40 strike. Again, who knows where this is going to end up tomorrow. There's a lot of open interest between 34 and 40 on the call side. Equally, between the 35 and 30 range, there's a lot of open interest on the put. So it'll be interesting to see where the battle lines are drawn. I think a lot of this is going to be driven by the broader market. If we have a bounce and a recovery day in the broader market, specifically the Russell, I think we can get into the mid 30s again. So let's look at the IWM ETF most associated with AMC, as you can see, and the Russell 2000 chart below. You can certainly see there was a lot of volatility. There trying to be a few bullish recoveries, and the overall broader market just wasn't having it today. Obviously, the taper talks, interest rate concerns, COVID, you name it. There's a lot of concerns, especially in the Russell 2000, as it is a growth and recovery index. You certainly see it pretty well mirrors the overall AMC chart. We'll show you that very shortly. But if you look, so what is the Russell 2000? It is made up of the 2,000 smallest public companies by market cap. So it's got obviously AMC, it's got Plug Power, Restoration Hardware, on and on and on. A lot of the different mid cap, small cap type stocks. So again, a lot of the growth and recovery over a period of time has kind of slowed down. Obviously, earnings have come out for Q2. Some have exceeded, some have not so much, but guidance in most of these earnings report tends to show a slowdown in the overall market. A lot of these big companies providing guidance. So that's kind of got the, obviously the market kind of shaken up, at least in the Russell. Certainly COVID and many other factors are coming into play now. But if you look at the overall broader sentiment, and the options chain is kind of a barometer, in my opinion, of what to expect down the line. You've got 4.2 million put open interest, and you've got a little under 2 million in call open interest. So it is overwhelmingly bearish about the overall Russell 2000 recovery and growth stocks. And if you even look expiring tomorrow, open interest on the put side, 810,000, call options expiring tomorrow, 390. So it is over double on the put side as far as open interest is concerned, just expiring tomorrow. So with that sort of sentiment and selling pressure, without a separation catalyst with AMC and several other recovery plays, we're going to continue to be tugged downwards until the sentiment of the broader market corrects. So looking at the overall IWM for 3 months, AMC on the right for 3 months, same period of time, you see a general pattern. Obviously, no two stocks are alike, but you see an overall downward trend pretty much since the big run up in late May, early June, pretty much on both of them. Obviously, they responded very differently, but you certainly see the overall trend. This is another ETF I would like to show you. It's called JETS, Jets. It's an ETF that pretty well wraps up the overall airline industry in the United States. For the last 3 months, you can certainly see where it peaked at 27.44, and it has done nothing but bleed downwards ever since. And again, a lot of this is due to economic factors. Certainly, COVID is taking an effect. But overall, you can certainly see in the options chain, obviously the put open interest is less than the call open interest, which is good. However, you see on the bottom left, the put volume total has increased substantially, 30,000 versus 7,600 on the call side. So again, a lot of these puts and calls were probably purchased way out back when, but overall, you're certainly seeing the volume on the put side pick up. These calls and puts are very cheap, but overall, you do your own due diligence. But it is an interesting ETF to look at to kind of judge the overall recovery of the economy. Is just another. So what I want to show you is the VIX. You can certainly see, for those of you who don't know what the VIX is, this is volatility index. So green from a bull standpoint is not good. That is correction. That is actually bearish trends that goes counterintuitive to a normal stock chart. So as you can see, we've had many, many corrections. You can go back to 08, 09. You can certainly see the housing crisis where the economy fell off. You've seen several other corrections, but more recently, you've seen the COVID shutdown. You see the big green spike up. That was when we pretty much shut the country down and half the world. Overall, if you look at them side by side, it makes more sense. You see the VIX on the left, same time period. Generally, you see the SPY on the right. You see the housing crisis on the SPY certainly had the hard sell-off. Then it recovered, obviously, and we've been on an uptrend ever since. And you look at the VIX, if you look at the MACD and RSI, if you were looking at that from a normal stock chart perspective, you would say, hey, look, looks like the RSI is kind of making a bullish run. The MACD is starting to curl around and the buying pressure is letting up. However, that's counterintuitive. So the actual buying pressure is letting up. So if we have a MACD crossover, that would indicate we're going to have a correction. So kind of judging by what this looks like, somewhere in the next 2, 4, 5 months may very well. But overall, you can certainly see on the right of the SPY, we're certainly in overbought territory on both the RSI and MACD, just to oversimplify it. So my concern is obviously with the margin debt. I know there's a lot of due diligence and different speculation around margin calls, what have you. My bigger concern is, it pretty well falls in line over the same time period with retail investor growth. So if you look at U.S. desktop and mobile web traffic to leading brokerages, TD Ameritrade, E-Trade, Schwab, Robinhood, what have you, you can certainly see the spike since around 2019, 2020. And there's a correlation, obviously, with margin debt because a lot of people, especially retail investors, are playing with margin, whether it's options or equities, what have you. But you can certainly see there is a correlation to the growth of the retail investor and the platforms that many of us use, and also the margin debt. And my concern is the retail investor will be the one to get margin called, not necessarily banks. So anyway, be careful with what you're doing. But again, there is a correlation, I think, to this more than most people realize. So how did AMC do today? About like the IWM did in the broader market. Pretty much heavy selling pressure throughout. Tried to make a few recoveries, albeit small ones, but just couldn't muster it up today. We were just along for the ride, cork in the stream, right? You certainly closed at 33.82, down $2.77 or 7.5%. After hours down a few cents, no big deal. But overall, could have been a worse day. Certainly could have been better, but we were certainly pulled down by the broader market, and without a separation catalyst, we will continue to do so. So looking at the Russell 2000 chart, you see a very similar scenario, albeit the Russell today was a little more volatile. AMC pretty well held more of a consolidation type thing. Obviously, succumbed second half of the trading day to the selling pressure, but overall not near as volatile as the Russell 2000 chart was. Looking at the 5-day, 5-minute chart, certainly you can see with the selling pressure and the big sell-offs over the last couple of days have had a very detrimental effect to our overall momentum. But again, without that heavy buying pressure, some sort of separation catalyst, we are along for the ride. And I'll say it till I'm blue in the face. Break 37.50, you'll be at 40 in no time, but we need to at least get back to 35 in my opinion tomorrow. That is a support level we're trying to build, trying to stay into a new channel, but worst case scenario, we need to hold that at 31, 32 level if they try to press it down. If the broad market just doesn't work with us, holding 31 to 32 is very, very important. So looking at the daily chart, say it again, we need to hold 30, 31 without a doubt. We need to get back above 35, in my opinion, to get back into that new channel. The RSI is slightly below neutral, a lot of room to run. Hopefully, a lot of the heavy selling pressure from the broader market will end tomorrow, and we can have a recovery day. We are still in a bullish crossover MACD, but we need to break that 37.50 to get to 40. That is the big barrier to cross. Looking at GME overall, GME is just really struggling, not necessarily with interest, but certainly with volume. Holding that $150 level is absolutely key. It's probably more psychological than anything, but certainly 150 is a line we need to hold. And as you can see on the daily chart, it is just really scattered. They had barely over 1 million in volume today. It's just really, really slow right now. So getting whatever interest you can in GME, I'm sure would be appreciated. So nice little chart. It doesn't get all the love in the world, but check out Works. I know it's taken a few hits here and there, had some letdowns, but overall the chart is looking quite good. If it can break 330, 340, it may very well pop, but it's actually looking quite well on the daily chart. So let's look at the short interest data. 47.2 days is the average age of the short positions. That is about the same as yesterday. And overall, the trend data, they have returned shares again. T2 settlement, the more recent trend has been downwards, but make no mistake, I'm sure it will go back up. So institutional investors, 506, about the same as yesterday. Shares on loan, about the same as yesterday, 105.61. Cost bar, about 1.5%. Utilization, about the same, about 91%. Short interest changed just a bit. We are currently at 18.12% of free float. Borrowed shares today, 2.71, and they returned 2 million. Overall volume was down by about 10 million today to 47 million. and that is no surprise to the broader market sell-off. And according to Fintel, we're at 400,000 with a borrow fee of 1.07. Looking at the options data, the total volume again lower, 515,000. Certainly very bullish at 1.5 to 1. But overall, again, volume is kind of drying up again with the heavy selling pressure in the broader market, a lot of indecisiveness with the big institutions around the tapers and what to do, obviously, with reverse repos. A lot of concern, and I guess they're waiting for somebody to step out of line and figure out, hey, it's okay, we can buy again. IVs are extremely low as AMC is concerned. So overall, just kind of need to get the volume back up, get the interest back up, and again, broader market getting back on our. So let's close with a quote. Plans are nothing. Planning is everything, by Dwight D. Eisenhower. We certainly have, it looks like treacherous waters ahead over the coming months, obviously with COVID, with the broader economy, with the broader economic conditions throughout the world, quite frankly. We'll see how this all plays out, but it does affect AMC each and every day. I watch, different streamers, this, that, and the other. As much as I would like to tell you, AMC, the Apes, Diamond Hands Retail Investor are all responsible for holding up AMC each and every day, and that is true. We are very, very reliant on the broader market, as I show you each and every day. So I want to thank you all for watching, and as always, if you found this video informative and entertaining, please like, share, certainly comment, and most importantly, subscribe. But as always, I hope your life is full of green candles. Take care.